The issuer of dollars themselves, the Federal Reserve, lost $156 billion last year. That more than wiped out their equity. So you have a multi-trillion, if you include derivatives, uh, two
Quadrillions.
plus quadrillion dollar, yeah, quadrillions exactly. You have a system that's the foundation is negative equity.
Yeah.
So you have basically what we have is a Federal Reserve that's broke, technically insolvent. And oddly enough, and I talked about this last week. Oddly enough, last week there was I guess it was an undercover uh, story on the Fed that inside the Fed they've become woke. They believe, their monetary policy has got to combat climate change, has got to align with DEI. So now you have a Fed that's woke and broke. And I mean, that is the world's reserve currency. That's what the world is running on, which is the I guess the best way to say it is the world financial markets are running on fiction.
Well, it's so funny to have the peak always nation state of capitalism actually being run by a Marxist agenda, both culturally, socially, and quite clearly economically.
Right. Yeah, it's a clown show.
So, gold. We've discussed debts. Tell us, are we not? Is it not serving exactly its role? And I don't need to. In fact, it's probably worth also bringing up not just the gold chart, but the gold chart. I'd like to bring up the gold chart versus the yen, because we've also had the dollar. Because of these rate cuts, we're actually getting this perverse result of dollar dominance at the moment, and it will be, and it will
Right.
intensify. In other words, this whole system fails on a dollar strength spike and an interest rate spike, which has to be led by the Feds because they proliferated, they created the inflation. They now have to be at the forefront of fighting it as debt collapses, which will see in the order of collapse the emerging market nations that are offshore dollar debt. They're going to be forced into proliferating their currency to try buy dollars to make higher interest rate payments, and that's going to further exacerbate. So surely we're going to be due some serious FX volatility with the dollar being a wrecking ball on the smaller nations, and then eventually we'll have the World Economic Forum saying we didn't need that many currencies and normalizing what didn't need to happen. How's your pecking order in I suppose the order of events, these cylinders? We've got a V12 here. What's the firing order of collapse in terms of this?
Yeah, actually, I mean, it's hard to look at the order because there are so many potential matches to throw on this bonfire. Uh, I would say if you think gold has been strong in the dollar, look at gold in other currencies. Look at gold in euros. Look at gold in British pounds, yen, whatever. Gold is exploding. And actually, let me just go back. Gold's not exploding; it's the currencies that are imploding
Correct. Yes.
because the the common way of measurement is you measure an ounce of gold and how many dollars or yen or euros or whatever it takes to buy that. In reality, that's not the case. An ounce of gold is from 100 years ago, from 1,000 years ago, is still just an ounce of gold. It's that
Yeah.
same ounce of gold. That is the measuring stick. So really, this run, gold has gone from one 1900th of a dollar to I'm sorry, the dollar is was
One
one
nineteen
nineteen
hundred.
hundredth. Now it's one 2400th. So what's happening is the currencies themselves are imploding. It's not that gold and silver or even a cup of coffee or anything else is going up in value. What's happening is the currencies are declining and it's taking more currency. As far as the implosion, and I do agree with you that a stronger dollar obviously is going to work as a wrecking ball on the financial system. And what that'll do is it will wreck emerging market financial systems because they simply won't have the dollars to repay. And that's
Yeah.
what you're seeing now is that so many of these contracts in the past were done in dollars, and uh, you have you have many entities scrambling to buy dollars to pay down their debt. And I mean that's bleeding off, but what that's going to cause is it's going to cause some failures. It's going to cause some defaults. And once you get defaults in a system that is leveraged as high or as much as this system is leveraged, that infection spreads, and it spreads all the way up the chain and obviously ultimately to the reserve currency of the world, which is the dollar. Uh, and of course, treasury debt itself, as we spoke a little bit earlier, treasury debt itself is mathematically infected. It cannot be paid off in current terms. The only way to pay it off is basically to print the dollars, uh, which dilutes the dollar. So that's you're looking at a strong dollar that's cutting its own knees off by forcing newly created dollars to pay off the current and past debt.
Yeah, that's absolutely right. I brought up the yen as you were speaking, Bill, and actually, since it made the 300,000 yen per ounce mark, having broken from the 145, which is already a doubling, it's actually gone into a parabola now against the yen, and it's at way up at 365. So that's probably of a first world currency as well. It's not the Turkish lira we're talking about. It's never bad to show that chart if we can get something just what it means in emerging countries. That's against the and that's in a non-long log scale. I mean, there's some bad wicks on here. Let me just remove that all. But I mean, that's against the lira. And I do feel my home state of South Africa will not be far off because they've been put not far off Turkey in terms of dollar debt. The only thing I think they have going for them is they still pull a bit of gold out the ground, though. But not quite to the same levels they used to. So we're going to see a rolling contagion of emerging markets that got the Perkins economic hitman model put on them and are sitting rich in
Right.
debt in dollars. So it's got to be an FX crisis, hasn't it? And they're going to let it roll and knock them out. And then that will see, you see, this capitalism didn't work. Too many currencies. We need to have these central bank digital tokens, and we just need a handful of them, or maybe even one. I don't know what they are planning, but I don't trust them further than I can spit on them. And silver, little bit of
Francis,
yes.
it's not that capitalism didn't work. What hasn't worked and what can't work is uh, the fractional reserve debt money system. I mean, if we had a different system where nations were actually issuing debt-free currency, we wouldn't be where we are now.
Oh, 100%. I'm saying capitalism doesn't work as their meme, hey, it's broken. Meanwhile, they actively worked against it to break it. I agree 100%. It's the best system we have. And there's clearly people that have set out to destroy it for nefarious reasons, in my take. So we've also seen, Bill, coffee, the Arabica, the Robusta bean, cacao. Oh my goodness, the cacao chart. Since we last spoke, we've had selected soft commodities absolutely shooting it. We have 3 ETFs that are in setups, a copper one, and a gas and exploration ETF, and then the third one was actually in boats, haulage, and mining and exploration. So it's actually 4 I've given you in all set up for upside and making upside. You've got those 3 softs I've mentioned that are absolutely ripping up. How can people actually expect anything but higher inflation numbers with it? Why are it seems that it feels like I'm continually being gaslit. Not having your personal company around the bonfire every week. Everything I look at the mainstream media, which I'm trying to assess and sift through, and even most other commentators are not talking about the fact that actually we're about to go into a serious increase in inflation, and it has to be accompanied with
Right.
interest rate spikes. And I think that's captured media as part of my answer there. But how do you see it playing out? Is there anything you would add to that? Are we going higher on inflation?
Yeah, inflation, I mean, like you just said, cocoa, coffee beans, I mean, just commodities in general. California just passed their $20 minimum wage. I mean, there's no question about it. Inflation's going higher. It's not going lower. Although at some point in time, we are going to have obviously the financial collapse, and there's your deflation. And I've said for many years that we're going to have inflation of the things you need and have to have, and deflation of the things you've already bought and what you own. Uh, you did mention silver a little bit ago. It's interesting. Silver is actually trading at a $2 to $3 premium over New York and London in Asia. Gold is trading at roughly a $40 premium over London and New York gold. And what that's created is an arbitrage. Simply, you buy in the West and you sell in the East, and you lock in, like I said, $40 on gold, two or $3 in silver, and you pay your shipping costs, and you're left with a profit. It's a guaranteed trade. So
Yeah,
gold and silver are being bled from the West to the East.
I was just about to say that's
That,
the travel vector.
pardon me.
Yeah, no, sorry, I interrupted you
I,
there. You've nailed it. It's the travel vector as well. It's not just the arbitrage. It's showing you where good money is being valued properly and where it isn't.
well, right. And as we were just talking about foreign currencies, because the dollar is stronger versus foreign currencies, you mentioned the yen. You could look at the yuan. Um, Foreign currencies, because gold and silver are when they're priced in those currencies, are showing much bigger percentage gains. So you've got more fear in foreigners that they're going to lose their capital versus real money. So you're getting an onslaught of buying from the East. Now, interestingly enough, uh, I think it was this past Friday, I read an article where China is encouraging their citizens to buy silver. And I guess that's, just because it's cheaper to the price of gold. I mean, we still have an 82, 83, 84 gold to silver ratio. But to see China officially recommending to their citizens to buy silver, that's 1.5 billion citizens. If every single citizen bought 1 ounce of silver, they would, I mean, what is the production of silver worldwide? A billion two, somewhere in that neighborhood. So they'd actually buy more silver that is produced in the whole world in a year's time.
Yeah. And they
And
listen to
one other
governments.
thing on, yeah, one other thing on silver. I think this green push that they've had for the last few years, I think that's coming home to roost, because they're finally figuring out the amount of silver and other rare earth, other minerals that are needed. They're finding out that, I mean, solar last year ate up 200, 300 million ounces of silver, and we're not even ramped up to where they want to be by 2030. This silver doesn't exist. It certainly doesn't exist at this price.